community and tells you how you can use that to your real estate advantage. And now, here's your host, Dick Barr.
Hello, Lake County. This is Dick Barr here on Unlocking Lake County with Dick Barr and our beautiful host, Kristen Kaufman. Say hello, Kristen.
Hello, everybody. Welcome.
It's so nice to be back on this beautiful, sunny 80-degree day.
The weather said April Fools.
Yeah, no need to adjust your dials. This is not a pre-recorded forecast. Boy, is it crummy out there. I'm looking at the weather forecast right now, and it's showing 34 degrees above freezing, but it feels like 21. And no real good end in sight, although Saturday looks like we're going to be getting some sun.
Okay.
47 degrees, so a little bit chilly, but pretty seasonable. Anyway, I think our levels are popping a little bit on the program channel, so I'm going to bring me back just a hair. I think that's much better. Welcome back. It feels like forever since our show last week. We've had a busy week. You had a huge open house this weekend, didn't you?
Sure did. Oh, my God. It was so much fun. Right there on the water. Gorgeous.
Yeah, beautiful views on that house. What's good to know is that there was a time where open houses were pretty much dead. No, you'd set up an open house, you put up your signs, you send out your postcards, absolutely. And you might get one couple through. You might, oh, geez, who's going to eat all these sandwiches? Yeah, definitely seems to be popping up. A lot more traffic coming to the open houses, right?
Yeah, I mean, I haven't personally experienced a super dead open house, so it sounds like I entered at the right time.
Hey, you definitely did, or maybe you just did a really good job promoting it.
Yeah, it must be me.
It's got to be you. When all else the same, it was me. Anyway, welcome back. It's been a rather interesting week in real estate. A lot of buyers entering the market as we're starting to veer into the spring market, but yet not a lot of new inventory coming on the market, so it's getting challenging out there. So we're going to give you tips and tricks on how you can compete as a buyer in this market and also how you can maximize things as a seller in our market. But we're going to head straight in to my favorite my favorite segment. And we need a producer. Producer's going to come in and get everything set up for us. And that's why our music plays so long at the beginning of the intro, because Kristen's getting her videos out there. I'm getting my video live streams out there. So that music gives us a nice little break in time so we can get everything rocking and rolling in time to be live for you.
You say we need a producer, but you and I both know full well that you love taking all of your business into your own hands.
Yeah, that's true. I have a hard time giving up control.
You do, because you're going to do it the way you want it.
Right. There's only one person who would do it like me, and that's me. Anyway, here it comes.
Stay on top of the market with Dick Barr's Market Minute.
Dick Barr's Market Minute.
Okay, here we come with another edition of Dick Barr's Market Minute. We're going to start talking about the whole region as a whole and what's coming on the market, what's going off the market, how fast things are selling, what the highs and the lows are, and how quick things are moving. We're going to start with the entire Northwest Lake County, where there's 102 active listings. This week, we've had 30 new listings compared to 38 last week, a slight drop of 20%. Under contract in the past 7 days, there's been 41, about tracking with last week's 43. In the under contract in the past 30 days, 173, big jump. The prior month, only 117. Days on market average for the region is only 22 days with a half a month supply of inventory. The lowest price in the region was $50,000 with a highest of almost $3 million. Highest active on the market is that beautiful mansion in 60046 at $4.5 million. Oh boy, I would love that house. Would you live in a super expensive, gorgeous house?
Yes.
Yes, I think I would too.
What a weird question.
Now, what if you had to pay for it?
Well, maybe.
Anyway, the regional median price was $325,000. Now we're going to head over to Antioch, where Antioch still accounts for a whole quarter of the inventory for the entire region. Well, that was interesting. I got to figure out how to turn off the sounds on my computer. The Antioch represents 27 active properties on the market. New listings this week, only 4. Big drop from last week where there was 12. Under contract in the past 7 days is 8, slightly up from last week where there was 6. And this month, 35 under contract, almost double last month where they had only 18. The days on market average for Antioch is 28 days with just under a month supply of inventory. And for those new listeners who don't know what a month supply of inventory is, that's how long will it take to sell every home on the market based on the pace at which buyers are buying them if no new listings come on the market. So that's saying that if Antioch brought no new listings, it would sell all of its inventory in less than 1 month.
Crazy.
Lowest price in Antioch in the past 30 days was $140,000 with a high of $1.275 million. The highest active price in Antioch is $2.8 million with a median home price of $274,000. And that's the lowest median in the region this week. Now we're going to head over to Volo, Fox Lake, and Ingleside combined, where only 13 homes are sitting on the market. 4 new listings this week. Big jump from last week where there was only 1. Under contract in the past 7 days, 3, just about the same as last week where there was 4. Under contract in the past 30 days was 12, compared to 10 last month, a slight tick up. And the days on market average is only 9 days. So if you list your home in Fox Lake, Volo, or Ingleside, be prepared to move fast because they are selling fast. I'm going to have to turn that off somehow. Ding. The days on market average for the region is 9. We already said that. And the month supply is also just under a month with 0.8. The lowest price was $75,000 and the highest price was $875,000 with a median lying comfortably at $331,000. Now we'll head over to Grays Lake, Gages Lake, Haynesville, Third Lake, and Wildwood, where they're sitting on 20 active listings. 4 new listings this week compared to 7 last week. They had 8 homes go under contract in the past 7 days compared to 7 last week. And under contract in the past 30 was 28, a big jump, about 50% increase from last month when there was only 18. The days on market average for the Grays Lake area was 19 with, again, just about a half a month supply of inventory. Lowest price was $135,000 and the highest was $520,000 with the highest priced home on the market at $1.5 million and a $331,000 median price. Now on to Gurnee, Wadsworth, and Old Mill Creek. And Gurney's been really low on its inventory lately, but starting to get some new homes out there.
Hooray!
Yes, exactly. 16 active homes on the market. 6 new listings this week compared to 7 last week. Under contract in the past 7 days was 7 homes, and that's compared to 9 last 7 days. And in the past 30 days, Gurnee area has seen 28 homes go into contract, which is double last month's where it was only 15. The days on market average for Gurnee is only 16 days, and again, half a month supply of inventory. But that's good because last week, you remember, the month supply of inventory for Gurnee was really low. I think it was only 3 days. The lowest price home in Gurnee was $185,000 with the highest price of $1.25 million. And the highest active home is, $2.199 million. Median price is $380,000. Now over to our backyard in Lindenhurst and Lake Villa, where we have 19 homes sitting on the market. 8 new listings this week. Big jump, almost triple from last week, where there was only 3. 8 homes under contract in the past 7 days, about double the prior week, where there was only 4. And in the past 30 days, 28 homes have gone on the market, compared to 24 last month. So a slight tick up. The days on market average for Lindenhurst and Lake Villa is 20 days, with about a 0.6 month supply of inventory, just over half a month. And the lowest home sold in the past 30 for the area was $50,000. With the highest price of $585,000 and the highest active price at $4.5 million. There's that beautiful mansion. And the median home of $300,000. The now on over to the Round Lake area, where lowest active inventory we've seen so far at only 7 listings on the market in the Round Lake area, which is surprising because that's a huge population. Then the Round Lake area includes basically everything in 60073, which is all of the Round Lakes in Haynesville. But the new on the market this week was 4 listings compared to 8 last week. Under contract this past week is 7 compared to 13 the week before. The number of homes under contract in the Round Lake area in the past month was 36 days, 50% more than last month, where it was only 26. But this is surprising. The days on market average jumped up to 31 days. That's the largest I've seen as an average for the Round Lake area in quite some time. But just over a month's on the market for the average sale in 60073. But the month supply of inventory, because they have so few homes for sale, is only 0.2 months. So what is that? So 30 times, that's about 6 days. 6 days worth of inventory.
Wow.
Lowest home price sold was $126,000, with the highest sold of $475,000, and the highest active price at $399,000, with a median home sold price flat at $300,000. So that's a lot to digest. There'll be a test after this. Did you get all that,
I'm
Kristen?
ready.
I hope you are. The what we're seeing now, more so than we have in the past several months, is when the homes are going in the market, the number of showings is just skyrocketing. There's clearly many more buyers in the area than there are sellers, and that's creating this huge inventory problem that we're having. Kristen, did you see, and knows a fine answer, did you see the TikTok I posted from last week's video where we talked about rent prices? It's cheaper to rent versus sell. Did you see any of the commentary on that?
I did see it. Yeah. I think someone called me willfully unaware.
Yeah.
As if I've never rented before.
It was funny. What's interesting about when we put stuff here, real estate is so local, right? And when we put stuff out on the big channels like TikTok, Instagram, undoubtedly it's going to hit markets where they don't have the same dynamic that we have here in our area. Plus, there's a large population of the public who are not aware of what the total cost of renting is over a lifetime versus the total cost of ownership.
Sure.
So not that whoever that one person commenting was will hear this on our
that's okay.
And that's okay. And is when you look at the long term for the history of home ownership, and what's funny is when you evaluate the wealth between homeowners and renters. I believe the national average is the average homeowner possesses about $300,000 and some odd worth of individual wealth. The average wealth of renters is about $7,000. Now, and that's why you look at things over time. People gain equity. Obviously, that's a benefit, but equity doesn't do you any particular good unless you were to refi or sell and take that equity out. So that aspect is kind of a long-term benefit. But there's also tax advantages for owning versus renting. You get to write off your interest on your mortgage. You get to write off your property taxes. Now, with the new tax laws in place since I believe about 2018, The tax benefit in Illinois is no longer as good because they've capped state and local taxes at $10,000. So if you have property taxes of $12,000, you've already gone over the state and local taxes, and so you don't get to write off as much, but you do get to write off the interest. And in the beginning of your mortgage, most of your payment is interest. So if you have a $2,000 mortgage payment, probably about $1,700 of that is interest. Maybe a little bit more, maybe a little bit less. And depends on what your rate is and the term that you took is. If you take a 15-year term, you'll have a smaller percentage of interest to, or relatively small compared to the principal portion of the payment. So the numbers are clear. They're 100% that over time, homeownership has always proven to be a better value. And if you just think about, especially if you're buying in, like anyone bought 4 years ago, and then the position that they're in today, the amount of wealth and equity that they've built in just 4 years is, I don't know, I believe it's probably unprecedented as 100%. Far as an increase. I remember the 2006 to 2008, or 2004 to 2008, there was large jumps, but that was built on some different premises. A lot of people were buying multiple properties at that time, and they were taking inventory off the market. We're in a different state right now, where the cause of the inventory problem are sellers unwilling to sell to give up their low interest rates in exchange for higher interest rates, and the lack of building new product.
Well, there's also a third aspect to that, and it's actually going to roll directly into something that we're going to be talking about on today's episode. During the open house that I hosted over the weekend, and actually previous open houses throughout last month as well, I've had a handful of conversations with potential sellers. And when I say potential sellers, I mean people who feel that they are ready to sell their home and move on to the next stage of their life, but are apprehensive to do so because they are worried that they're going to list their home, it's going to sell right away, and they're not going to have enough time to buy something because they know how low inventory is. And that's something that we're going to talk about on today's episode as well. But it definitely contributes to that aspect as well.
Yeah, no, definitely, 100%, and that's good. That we're going to get to that later in the show. And speaking of later in the show, kind of let's give a rundown of what you expect to hear from us today. We're going to talk about the old Regal Cinemas, what the future is for it, and sad news about what just happened to it recently. And then we're going to be having our good friend Sly Marinka from the Sly Marinka team at Cross Country Mortgage online today. He's going to talk about mortgage rates and some first-time home buyer tips. And then in the second hour, we're going to talk about some pretty aggressive seller strategies on how they can maximize what's going on in the market today, and see some real clear benefits, places where they can make some extra money and places where they can save some money. And then, of course, we'll have our very famous Mythbusters offered by Kristen and our listener Q&A. So really glad that you joined us this week. Thanks so much. What else are you going to do? You're not going to the beach, so you might as well sit down, watch and listen and enjoy.
Absolutely. This snow isn't even fun to play in.
I know, it's all wet and crummy.
As a mom of young kids, it's kind of shaped the way that I view snow. I used to be so annoyed by it. Before I had kids, I'm like, oh, I got to clear off the driveway. I've got to clear the snow off my car. Ugh, it's going to suck to drive in. And then I had kids, and now it snows, and I'm like, yes, it's going to be so fun. The kids are going to be so excited. We're going to get out there, make a snowman. And then you get this rainy, wet, sloppy snow, and this isn't it. My kids still want to play in it, but I sure don't.
Do you ever take your kids to the sled hills in the area?
I have.
Yeah. Which ones do you go to?
We just go to Harts Hill over in Round Lake.
Harts Hill's a great one. I love going down it, but they need a lift.
That would be nice.
To get up. Yeah, walking up that one's tough. My favorite one is the Lake Villa Township hall, where they've got a toboggan run there, which is really cool. We don't take a toboggan down there, but we take the sleds, and it really slicks up and gets icy, so you fly down that track.
Well, that'll be more fun when my kids get a little bit older and they're a little bit harder to impress. Actually, when my oldest was a baby, my husband and I, we lived in a townhome, and it was one of those townhomes that when you stepped out your front door, there was sort of a slope down.
Oh, yeah.
So we had our own little makeshift hill, and for our 2-year-old, I mean, that was the coolest thing ever. So all we had to do was step outside our front door. But, you know, as they get older, they get a little bit harder to impress. So I'll keep that in mind for the future.
Yeah. But they also have a good downhill, too, at the Lake Villa Township Caboose Park area. That's one of my favorite parks in the area. They do a good job over there. You know, Lake Villa doesn't have a park district, but the township performs all the functions that a park district typically would.
I never pieced that together.
Yeah, they maintain the parks. They do the lake shores. You know, they have several lakes that are part of the township that they maintain, and they do a really good job. And you know, if you look at their tax rate compared to some park districts, it's incredibly low for I think what the residents get. Okay, so let's talk about. I know you know something about this. So back in, was it last year, Regal Cinemas, when they closed their doors?
Might have even been the year before, was it?
Might have been. I know it was shortly after COVID. I don't know how long after COVID. But Regal Cinemas that has been there in Round Lake Beach for decades. It was a beautiful movie theater. They had 10 or so theaters, great lobby, nice gaming area. Was always a fun place to take the kids and, you know, and go with friends. But sadly, you know, in the wake of COVID, as was the fate of many businesses, they closed their doors, and it had sat vacant for a little while. And then news came about. We saw it in the Village newsletter that a new operator was going to acquire the building.
Yep.
And their plan was for some really cool entertainment aspect that I don't know all of that, and I think you probably know more. But they were going to open in the interim some of the theaters so they can have people starting to come in and get used to the facility again. Then they were going to close and then do a full rehab and then build their full-scale entertainment center. Sadly, those plans were cut short because of some vandalism that happened I think it was last week. But do you know anything about the plans of what the whole entertainment complex is expected to be?
The whole entertainment plan, no, but I do have a little bit of an insider tip from an unconfirmed source.
Oh, we don't know who that is.
That there is plans to have a indoor go-kart track installed.
Oh my God, really?
Yeah.
Oh, wow. Okay. Oh, that's pretty cool.
Yeah.
Sounds dangerous.
Sounds fun.
It sounds fun. I'm one of those dads, like when you're on vacation with the kids and you see other families with their kids and the kids are just getting a little bit too wild. I'm like, I wish someone would tell that kid to not be so wild. I'm an old man in my old age. So what else? That's it? That's all you know?
That's all I know. And it's funny, you mentioned being an old man, and I feel like I'm starting to become a part of the adult group that lives in the area because for the first time I can say something that I used to hear people say all the time. And in regards to the Regal Cinema, I remember I can say, I remember when that was being built, because I do.
Oh.
And that, I think, is one of the only things that I can say that about in the area. So I'm becoming one of you. I'm growing up.
Did you have to walk through 6 feet of snow uphill both ways to get to it, though?
You know, I didn't. I'm an entitled millennial.
So you're a millennial then.
Yeah.
You just don't know how hard we Gen Xers had it.
Way harder.
Okay, so unfortunately, and we're just going to go back to the vandalism.
Yeah.
Last week, reports came in that a fire alarm went off, and the awesome fire department went out there, and then the Round Lake Beach Police Department went out there, and they had found, sadly, vandals had got in there. They had broken almost everything. They broke indoor sprinkler systems. The water was flowing everywhere.
So senseless.
For nothing.
For what?
For nothing. For probably clicks and likes on some social media platform. It's amazing how stupid some people are. You ever see those videos where like, I'm doing something illegal, and then here I'm going to post it for 4 billion people on the internet.
And here I am thinking, man, we have the internet. How can you be so bored that you need to go ruin something?
I know, right?
Like, there are so many cooler things to do.
But come on, the internet gets boring too.
Not for me.
Not for you.
Not for me.
Do you ever find yourself sitting there looking at TikTok or Facebook Reels and you're just doom scrolling and you're like, oh my God, this is my life. And then you're like, you've got to just shut it off, put it down.
No, I've got
do.
young kids. I'm lucky if I keep my phone in my hand for 5 minutes before someone's asking me for something.
I hear that. I hear that.
Between my kids and my clients, I'm busy.
I've been trying to consciously avoid just staring at my phone so long.
Sure.
And I started playing chess a couple years ago online, and that's actually taking a lot of time. But again, it's on my phone, so I'm just staring at my phone playing chess. So my kids will come home, my kids' friends will come home like, hey, Mr. Barr. And I'm like, not now, I'm playing chess. It's a timed match. I got to protect my rating.
That actually happened. That was an exchange that you and I had once a while back. I don't know. You
Really?
probably don't even remember it because you were on your phone. Yeah, back before I ever was doing real estate. I was working as a bartender, and you would come in, and I'm like, hey, Dick, and you're like, hey, and you're staring at your phone, and I'm like, does he not like me? What have I done? And you ordered something, and I gave it to you, and I left you be. I tried making some small talk. How's the market these days? Like I knew what I was even asking. And I think within like 10 minutes, you put your phone down, and you're like, sorry, I was playing chess. How you doing? And then we were talking just fine. But for 10 whole minutes, I thought you did not like me.
See, and that's the problem with the phones. They're creating this kind of antisocial situation where people think you have no interest in them, but they just happen to have a hyper-focused interest in whatever they're doing on their phone at that time.
Yeah, and as the person who's experiencing it while you're using your phone, I mean, you're kind of not in your body anymore, so you're not even really aware of how you're looking to onlookers who are maybe trying to talk to you or look for a nonverbal social cue to see if you're ready to have a conversation.
Yeah, no, absolutely. We're just about at our half-hour break, and we're going to take a break here, and I'm going to see if I can fix that errant noise coming from my computer that's flying out through the airwaves.
You hear that, folks? We're going to get our producer on it.
We're going to get our producer on it. But when we come back, definitely come back, because we have some great information from Sly Marinka, who's going to come in and give us a mortgage update on what the expected rates are right now. And he's also going to give us some first-time home buyer buying tips, which is guaranteed to help if you're a first-time home buyer. Anyway, so sit tight, and we'll be right back.
Unlocking Lake County with Dick Barr will return in just a few moments after these important messages. Don't touch that dial.
Of the importance of being proactive in the fight against cancer. Due to improvements in detection, treatment, and public awareness, deaths due to lung, colon, breast, and prostate cancers are being reduced. Cancer is a tough topic for people to confront, but if you take the time to be informed, you can greatly reduce your risk. This from Obanoff Auction Service in Round Lake, working to make our community even better. Remember, an ounce of prevention is worth more than a pound of cure.
Welcome back to Unlocking Lake County with your host, Dick Barr.
And we are back. Welcome to the second half hour of Unlocking Lake County with Dick Barr. I'm your host, Dick Barr, here with the lovely Kristen Kaufman.
Hello, welcome back, everyone.
And we have a special... Uh-oh. What is that doing? Oh, I know why that's happening. Okay. Because the Twitch is playing on that computer. So let me turn that Twitch off.
Ooh.
There we go. I'm like, why are we getting... So like the Skype computer that connects these calls to the guests also plays the Twitch feed, and that Twitch feed is feeding it. So anyway, I'm going to ask, I'm hoping we did this right. Sly Marinka with the Cross Country Mortgage. Are you there?
Yes, hello. How are you guys today?
Oh, fantastic. We're doing great.
Hi, Sly.
Excellent. Hi, how are you?
Good, how are you?
Wonderful. Thank you.
We appreciate very much you making the time to be with us today. We know you had appointments and couldn't make it into the studio, so thank you so much for being able to be on the phone, because I know you've got some important information.
Mm-hmm.
So hold on.
My pleasure. Happy to be here.
Before we let you go wild off on your data, I have to do something, because we do this every time when it's about to be you, and sometimes I screw it up. Here we go.
Here is the Mortgage Minute with Sly Marinka and Cross Country Mortgage on Unlocking Lake County with Dick Barr.
There you go. Now it's you.
Love that intro. Thank you so much. I'm happy to be here today. Mortgage Minute. Basically, just want to go over a couple of things here. Current mortgage rates are hovering right around, still about what they were last week, just hovering around right around 6.9% on a national average. We did see the 10-year U.S. Treasury tick up a little bit, about 8 basis points since last week.
Wow.
However, the mortgage rates have kind of stayed where they were, so it hasn't affected it too much. We're still hoping for those days when rates could come back down. I was actually just looking at the charts, and I went back as far as you can go, and boy, what happened in 2020 and 2021, I don't know if we'll ever see that again, but I mean, that was nuts. So in any case, that's neither here nor there, but current rates hovering right around 6.9% on a national average. And that's for a 30-year loan.
What about a 15-year? What can they get?
15 years are not much better than the 30-year. Typically, the spread is, anywhere from 0.5% to 1%. Historically, the difference between 30 and 15, if you're getting 0.5% right now, you're getting lucky. There's just not a lot of difference between the yield on long-term and short-term loans right now. So relatively close to the same.
Now, Sly, I know there's options for buyers if they want to buy down a rate. Can you get into that process a little bit? Tell us what's that look like for a buyer?
Absolutely, yeah. You always want to get all your options when you're shopping mortgage rates, because there are ways to get the interest rate lower. And one of the ways, the main way to do that is by doing what's called a buy down, or paying a point or a discount fee. And the way that works, Dick, is let's say the national average is 6.9% today with no points. So you go to your lender and say, I want a mortgage. They say, okay, the rate's 6.9%, and you're not paying an extra fee up front for that. but you decide, well, I'm probably going to stay in this house for a long time, so I really want a lower rate. I don't think rates are going to come down. So that lender can give you options to lower your rate by charging you an additional fee up front. Typically, it's around 1% of your loan amount for about 0.5% on the interest rate. So let's say you have a $200,000, you're looking for a $200,000 loan. You could save about 0.5%. That would cost you an extra $1,000 up front, $2,000 up front, because it's 1% of the loan amount, to save you about $83 a month. So you want to do an analysis to see how long it's going to take you to break even and actually start making or saving money after you get your $2,000 back. And that usually takes a while. So right now, a lot of the buyers not necessarily super excited about paying points, because a lot of people do think that the rates are going to come down and they're going to be able to take advantage of a refinance over the next few years. And if that does happen and you pay the points now, you never really saved anything because you weren't in that loan long enough to realize any savings. So it's an important conversation to have with your lender. Look at all options, explore all options. There are some lenders that just kind of sneak those in there without having the conversation. So just be careful of that. You always want to make sure you're getting all of the options that are available to you so you can make the best decision possible.
So I'm just doing some quick math in my head. I'm lying. I actually used it on my calculator. So you would basically, so in that scenario, if you're in a $200,000 house, you put a point down, that's $2,000 cost up front. Approximate savings, $83 a month. So $2,000 divided by 83 is about 24 months. So the break-even point is 24 months. Is that about right? Am I doing that math right?
Yes, that sounds about right. Yep. So after 2 years, you're saving $83 a month. So if you stay in the loan for a long time, that could be significant savings. But if between now and that 2-year break-even point, rates come down and you refinance, you don't get that money back. That point you spent now is long gone. So that's why you want to make sure you're thinking about all of the options, looking at all the options to really make the best decision for your home purchase or refinance.
And I like that distinction you put in there. So stay in your loan, not stay in your home. And that's an important distinction, because it's not how long you plan to live there. It's how long do you plan to keep that particular loan before either refinancing, paying it off, or selling.
And I'll give you my own personal example. We purchased our home in 2015, and we are on our third loan. We started on a 30-year, switched to a 20-year, then switched to a 15-year. So we've never really stayed in a loan long enough to have it had made sense to pay points. So just something to think about. Most people don't stay. You may stay in the home long term, but most people, when the rates come down, they refinance. If they need to pull equity out for home improvements or debt consolidation, whatever, it's pretty common in our society for people to refinance large debts. So just something to kind of keep in mind.
That's another thing that I love when you talk, because as you're talking, I'm like, oh my God, there's another great point that I thought of based on everything you just said. You're a loan professional, a mortgage professional. You know the inside scoops. You know when to get in, when to get out, when to refi, and most of the public doesn't. And just like with real estate, we know what a good deal is. We know what not a good deal is. We know when to buy, when not to buy, when to hold, what to upgrade, what not to upgrade. And the general public doesn't know what we know. And most people don't recognize the value. Well, who has their own loan officer for life that they work with always, that they could always call for advice? When do I do this? When do I do that? Nobody.
Yeah.
Nobody thinks about their loan officer as someone who could be a long-term partner for what's the best time to do something based on averages. Like, I'm just finally, after 20 years in the business, people are starting to say, hey, I really liked having a real estate broker who I can call, whether I'm buying or selling. He's not going to make a dime off this phone call, but knowing that I can count on him for reliable advice on what to do today, even if I'm not buying or selling, but what's going to put me in a good position today for the future. Same thing with the mortgage broker. And I never really thought about that. People have their accountants, they have their financial advisors, they have their attorneys, but people should have their mortgage brokers too.
Absolutely. You should 100% have somebody on speed dial for, those situations in life that come up that, you may be able to, get some valuable insight and some valuable information. And, there's multiple ways to do things, and just to have somebody kind of thinking and looking out for your best interests. I will say that with technology, that has gotten better, because most lenders now have a pretty rock solid CRM, where they're going to be reaching out to you. And I know we have a huge database, of our own customers, that as soon as rates come down, I get notifications. Hey, maybe reach out to, Mr. So-and-so and say, hey, this is where you're at. This is what's available. Would it make sense at this time? And we could just open a conversation like that. Most lenders have that now, Dick. So, yay technology.
Well, I don't think that's a great idea at all. I just go on the internet and find out everything I need to know.
Yeah.
What is that?
Yeah, you still get some of those too.
Who let him in the studio? What was that?
Right.
Okay. Maybe he's related to Gary the Ghost.
Maybe.
Gary the Ghost,
Yeah.
the guy that likes property taxes. Whoever that is thinks it's best to get your answers off the internet. How about a Facebook chat group? Yeah, I think those are really good places to find the answers. Okay, Sly, I know you've got some information for first-time homebuyers, and I know there's a lot of first-time homebuyers out there. A lot of them are scared. They don't know what to do, so you've got some information for them. Let's hear it.
Absolutely. So first-time homebuyers, right now, we are seeing a lot of first-time homebuyers actually come into market, because they're seeing the cost to rent is just so astronomical. And, it always seems like people have problems when they're renting, whether it's a neighbor, whether it's they don't allow pets, whether it's you want to change something and the landlord won't allow it. So we are actually seeing a lot of first-time homebuyers come to market. I just wanted to make, the listeners aware of some of the awesome programs that are currently available for first-time homebuyers. And I'll just go over some of the ones we offer. Now, obviously, every lender has their own, different programs that they offer. But, just to give you a gist of kind of what's available out there, there's a program that's called Community Promise at our company. Other companies offer it as well under different terms, but it's basically designed to help first-time homebuyers with up to $6,500 in down payment assistance with no strings attached. Now, there are some qualifications. God. Yeah, so there are some you have to qualify for this. You have to live in an area that is in an eligible census tract. You have to do a little bit of homeownership counseling, but it's $6,500 free money. There's also the Freddie.
Hold on, before you move on, Sly. I'm sorry, I want to ask you. Yep. So you say you have to live in that particular census tract. Is that where you currently live, or where you're buying?
That's where you currently live. You do not have to be purchasing in that census tract. You just have to currently live in an eligible census tract. And it's very easy for us to plug in your current address, and our system tells you whether or not you're eligible. In fact, just this week, I had a pre-approval that I was working on, and I got a notification as I was working on it before I even got to that these borrowers would qualify for the $6,500 down payment assistance. So it's something we plug in, and the system will tell us whether or not they live in a qualifying area.
So interesting. So if someone's like living in one of these identified census tracts, maybe it's a kind of lower than average income level, or a lower median income. This is an opportunity for them to kind of use this program to buy out of that community and maybe into a community that has kind of higher averages on income and prosperity.
Correct. Or they could live in the same. It doesn't matter where you're buying. It's just where you currently live. Okay,
that's interesting. Okay, I didn't mean to cut you off. Go ahead.
Yep. Yeah, no problem. So then the next one, if you don't live in an eligible census tract to qualify for that program, there's another program that's through Freddie Mac. That's called Freddie Mac Borrow Smart. That program goes up to $4,000 in no strings attached. Down payment assistance. For that one, you don't have to live in a certain area. However, there are income limitations, but they're pretty generous. If you make, so just below $88,000 a year, you qualify for $4,000 potentially in down payment assistance program. Down payment assistance. If you're between $88,000 and about $153,000. You qualify for $3,000 in down payment assistance. So that's a huge spread. And I mean, typically the income levels haven't been that high. They were always much lower than that for you to get any kind of assistance. So they have increased the income levels to help more first-time home buyers. This is also a great tool to exactly what we were talking about before. You can use the money however you want, but what we're finding is a lot of the buyers that are doing this program, they want to see the options of buying down their rate and getting a below market rate on their first home. So very interesting. When it's not your money, it's easy to spend it and say, well, you know what, this is free money I'm getting, no strings attached. I'll just use it to get a lower interest rate and lower my monthly payment.
Oh, that's smart
but again,
use of it.
You want to
It does seem
explore
smart.
kind of all options.
Yeah.
Yeah. Now, when you talk about income limits, is that per individual income limit or is that total household income limit?
That's not household. It's just the people that are on the loan.
So the
if
borrowers.
it's an individual that's on the loan, we are only looking at theirs. If it's two borrowers on the loan, we're adding their income together, and it's got to be below those maximums I kind of laid out. But it's not household. The next program that I wanted to talk about is IDA, which is Illinois Housing. And Illinois Housing does offer several different options that are excellent. They have a $6,000 option, a $7,500 option, and a $10,000 option. And all three of those, though, are in essence second mortgages. The ones that I was talking about before are not second mortgages. It's just a grant that you get at closing, whereas the IDA ones are second mortgages, meaning a lien is put on your property, and the options are either forgivable, deferred, or repayable. On the $10,000 program, you're repaying that over 10 years, so you're paying a monthly payment of about $80. That gets added. It's basically a loan. On the $7,500 one, it's deferred, so you pay it back once you sell your house down the road. Or on the $6,000 one, it's forgivable, but it takes 10 years for it to be forgiven. So the entire time, every month, a small portion of it is being forgiven. Great programs. The only thing I don't like about these are if the rates come down and you want to try to refinance, IDA will not subordinate. So you'll have to, either roll it into your new loan or pay them off at closing over the 10-year period. That's the only downside, in my opinion. So I just listed off a bunch of options. There are even more than that. I just kind of wanted to highlight some of them. Important to talk to a good lender, a good local lender that knows these programs. If you're a first-time home buyer, there may be options for you to be able to tap into some of these resources and reduce your out-of-pocket costs when purchasing your first home.
Thank you for that slide. That's great info.
Yeah.
I do want to address a couple of things that you mentioned, and just for clarity for listeners, because these are a lot of these terms are things that we take for granted, but some of our listeners, obviously, they're not in our business. You had mentioned that IDA won't subordinate, and just for clarity, what that means, they won't move their second position to the other one. They'll maintain their position on the liens. So that's why you've got to settle it before you can refinance. And then, but we talk about first-time home buyers, and then everyone who owns a house or has owned a house ever is like shutting us off because they're like, oh, I'm not a first-time home buyer. This doesn't affect me. But the definition of first-time home buyer is a little bit tricky. It's not exactly what you think. So why don't you tell us what exactly is a first-time home buyer?
Somebody who has not owned a home in the last 3 years.
Okay.
You are technically a first-time home buyer if you owned a home 10 years ago and you sold it 7 years ago and you have been renting for the last 3 years. As long as you have not owned a property in the last 3 years, you are technically considered a first-time home buyer.
See, this is why people who come to our country from other countries, they don't understand our language because we don't mean what we say.
Right. Totally. And again, and that's to your point, that's why it's important to have a good lender that you have on speed dial that, parents are listening and they, have an adult child or soon to be adult child that they're thinking about, possibly helping them out or give, this is great information. I'd be happy to share this information with anybody, or if they have someone they like and trust, reach out because there are plenty of options available right now for first-time home buyers.
Great. Kristen, do you have any questions for Sly this week?
I don't. You covered a couple of the things that I was going to ask you about. I'm working with some potential buyers right now who've lived in an apartment for, I think it's the better part of 6 or 7 years. They've settled in. They love their place, but the owner's selling and they got to go. They've got to get out and figure it out. And it's hard listening to how discouraged first-time potential home buyers or just long-term renters feel. This person had told me, I don't know if I'm even ever going to be able to buy. I don't know if I should rent for the next 5 years and maybe just buy something when the market crashes. And it's insane to me how much misinformation is out there. People truly believe that there's another crash coming. They believe they're never going to buy something. They believe that these things are just totally out of reach and out of touch for them. And to your point, just talk to a lender. They can give you the information without trying to sell you something. Yeah. They can give you that valuable insight, whether or not you decide to move forward with it. I think that people have this misunderstanding that calling a lender means you're committing to something, and that means that you're absolutely going to buy something, which couldn't be further from the truth. You're having a conversation with someone who's not going to try and sell you something against your best interest.
Yeah, absolutely. And with soft pulls now and being able to do a soft credit check, so you could really get a good idea of what that looks like. I mean, there's no reason not to. We sometimes get people that say, "Oh, we don't want you to pull our credit." Okay, well now we have an option where we can kind of pulling it, but it doesn't count against you, type of thing. And that's been a great option for people as well.
And I recently ran into a situation where a potential client was, we've worked with Sly and we love him. We love talking to him, but we're moving out of state. So we're going to have to find another mortgage broker. Is that true? You do have to be individually licensed in the state that you are originating in. So I personally, I do hold licenses in Illinois, Wisconsin, Indiana, and the lovely state of Florida. But besides that, I don't have any other current licenses. So I have a lot of clients that are, whether they're moving to Tennessee or New York or wherever, I personally wouldn't be able to service that client when they're moving out of state. However, my company and most companies have loan officers. Most large companies have loan officers in, multiple states, and a way to kind of get it done. So I just referred somebody that's moving to Georgia to somebody I work with, because I'm not licensed in Georgia. So, yeah. Great. Okay. So excellent. Well, we appreciate it. Do you have anything else to add, Sly?
I think that about covers it for the week. I appreciate you guys having me on again.
We appreciate you making the time for us. I love the information you provide. So useful.
Thank you, Sly.
Great.
My pleasure, guys. You guys have a great day.
You too. Take care. Okay, that was our first time we ever officially tried to do the phone connection, and it worked.
Success.
Fairly well.
Our producer deserves a raise.
Our producer definitely does deserve a raise, although he kind of threw us a curveball with that weird voice he brought in. Okay, so we don't have much time, but I do want to get to a couple of our Mythbuster questions.
Sure.
Because a couple of these are good ones. And we don't have an intro song for this, but Kristen...
Mythbusters.
There we go. There's our intro song. This is how it works. I'm going to state a myth, and then Kristen's going to either prove it, debunk it, or at least call it plausible. And let's start with this one. And it's always best to buy the worst house in the best neighborhood. Myth or not?
Is it always best to buy the worst house in the best neighborhood? I've heard that before. Where was that slogan made popular? Fixer Upper, Chip and Joanna Gaines.
Oh.
Yeah, you buy the worst house on the best street in the best neighborhood, and you go from there. And listen, that is not a terrible strategy, right? So location super matters. Location. It's crucial. However, buying the worst house can imply a lot of money for renovations. So I'm going to go ahead and say myth with a little star next to it, because while it is important to be in a good location, there is a lot of money that can get put into buying the worst house in the best area.
Okay, so just like anything, make sure that there's no one answer for any situation. It's always best to get the advice of professionals who can tell you what your expectations of cost and value are.
Absolutely.
Good job on that one. Okay. Here's the next myth. To make your offers more competitive, it's always a good idea to remove your home inspection contingency.
Oh my gosh. I mean, first of all, that ties into the last myth I just busted. No, it is not a good idea to do that. I personally would never advise someone to just completely skip a home inspection at all. There are so many things that could come up that you'd be completely unaware about. In fact, I'd like to share my first time home buying story, if that's okay.
Yeah, please.
So when my husband and I were looking to buy our first home back in 2018, I had absolutely no idea. First of all, that you did a home inspection. I had no idea what they would cost, and I had no idea. Yeah, I didn't know anything. And I didn't know how important they were going to be. And so we had a pretty low budget that we were trying to do. You know, we were still figuring out our lives at the time. We just knew we wanted to buy something. And so we would look, we'd find a place, we'd be like, this one's good enough, let's move forward with it. We'd spend, am I allowed to talk about how much I've spent on home inspections?
I don't know, let's not.
Okay, I'm just gonna say a lot more than I expected at the time, because because I had no idea how much they would be. And so we would get the inspection done, and we would find out that there was something horribly wrong with the house. I mean, one of the first house that we fell in love with, we had the inspection done, and we found out that the foundation was just completely cracking and sinking into the ground, and that it was going to cost a lot of money to fix. Yeah. Second house that we fell in love with, got an inspection done, found out that there was a ton of extensive water damage done. And so while that process was discouraging for me at the time, the perspective that I continued to gain through that over and over is that I was spending hundreds of dollars to save hundreds of thousands of dollars, right? Because had I moved forward with those sales without getting those inspections done, we would have been in the hole for so much money having to do repairs that were going to be crucial to the structure of the house.
Wow, that's poignant and impactful. Yes, and that's very true. I had no idea that was in your first experience.
It was, and it plays into one of the tips that I give first-time home buyers when they are saving up money for their down payment, or be in the beginning stages of putting together their finances to buy a home. Is I always tell them, make sure you set a little bit of money aside for some home inspections, because you never know what's going to come up, and it's better to have it set aside for that than to not have it set aside and have no idea. Had no idea that was going to be an unexpected cost coming up for you.
Excellent. Well, thanks for that information, and we will be back after the top of the hour with a discussion on tips for home sellers in our tight inventory market. So stay tuned.
Unlocking Lake County with Dick Barr will return in just a few moments after these important messages. Don't touch that dial.
Off Auction Service in Round Lake reminds you to raise your awareness of the importance of being proactive in the fight against cancer. Due to improvements in detection, treatment, and public awareness, deaths due to lung, colon, breast, and prostate cancers are being reduced. Cancer is a tough topic for people to confront, but if you take the time to be informed, you can greatly reduce your risk. This from Off Auction Service in Round Lake, working to make our community even better. Remember, an ounce of prevention is worth more than a pound of cure.
And now for today's answer. The French term for a housing area on a dead-end street is called a cul-de-sac.
Welcome back to Unlocking Lake County with your host, Dick Barr.
Hello and welcome back. This is Dick Barr, your host of Unlocking Lake County, here with my beautiful co-host, Kristen Kaufman.
Hi, everybody. Welcome back.
And for everyone who's watching this on our live stream, either on Twitch or YouTube or Facebook, you're wondering why there's silence during the commercial breaks. That's because we play a music set during the commercial, and we can't let that music go out over our live stream. Otherwise, the copyright police will slap our hands, and we could potentially lose our ability to live stream, so we don't want to do that. A lot of times I screw up, and I accidentally let the songs go through, but we try to catch it as much as possible. But that's why you see us kind of in the studio doing nothing for like 5 minutes at a time. So thanks for sticking with us. If you came back, you're in for a treat, because we're going to talk about on this hour, we're going to talk about tips for home sellers in a market like we've never seen before. It's crazy out there. There's so little inventory, and the homes are flying off the shelves so quickly, and buyers are being very forgiving about what they will and will not accept. So we're going to give sellers some tips and tricks for how they can maximize their advantage in this strongest sellers market I've ever seen. How about you?
Yeah, absolutely. So I've mentioned it earlier in the episode, but for anyone just tuning in, something that I noticed being said quite a bit from potential sellers is that they are ready to move on to their next home. They're ready to sell. They're ready to take the next step in their lives, whether it's upgrading or downsizing or relocating. But they are nervous to list their home until they already find something to buy, because they are scared of listing their home, having it sell in record time, as is happening across the market, and not having a place to live. And of course, as agents, we're like, we wouldn't let that happen to you. And that's something that we're going to cover in today's episode as well. But it's definitely something that I'm hearing over and over again.
Geez, I'm not sure there's much we can do to make sure, to guarantee that doesn't happen to them. There's that reality that you could list your home, sell it so fast, and literally not be able to buy something. Because the market is so competitive, so tight. So it really becomes a conversation about, well, how do we strategize? Mm-hmm. And we need to find out what flexibility sellers have.
Yes, and to be clear, that is what I mean when I say we're not going to let that happen to you, right? Is we're going to create a strategy that is going to help avoid that situation.
Right, and that's why the important conversation about who you use matters, because whoever you choose to use has to be at the back of their mind throughout the whole process is what happens to you if you buy and have no place to go. So we're going to talk about things that we can do to help limit the negative effects of selling your house without a parachute. So, like you said, one of the biggest questions sellers face right now: what if I sell and I have nothing to buy? So I think to start answering that question, we should talk about what the time frames look like in selling your home. So in the past, You would list your house on the market. It might sit for anywhere from 2 weeks to 6 months, maybe longer. You had plenty of time, and then you knew once you got that offer, you can go ahead and start shopping and then find a place and then place your offer. Might even be able to put down maybe a home sale contingency or a home close contingency. Maybe the seller would accept that. If they didn't, you'd go on to the next house, and then you would find something. But now, with every new listing that pops, we're seeing 38 to 50 showings on these homes, and they're all multiple offer situations. They're all going over for what their asking price is, and sellers who are now buyers are finding themselves in a bit of a pickle. So the first most important thing is when you are getting ready to decide to list your home, what you've got to decide is how flexible are you to maybe find temporary housing if needs be. And we've never had to really have that discussion before with all the sellers. There's been pockets of market where it's come up, especially if there's timing between when you sell and maybe you're having a home built, right? Mm-hmm. So your home's built, your delivery date's September, but you want to maximize the spring market to get the most bang for your dollar at the on your sale. So you might say, okay, well, I'm going to get a kind of a temporary rental situation. And there are options for that. There's executive housing, there's short-term rentals, and there's, there are some hotel chains that even offer that, kind of like those extended stay type hotels.
Yeah, my family and I stayed at a hotel for a week in between the sale and purchase of our home. Not because they were spread apart that far. We had a situation where the closing date, Dick, you were a realtor back then, where the closing date kept changing for different circumstances. And so at one point we were like, you know what, we're just moving out. We're done. We're moving out. We're going to stay at a hotel until it's time to go. And I think we ended up staying there about a week. The kids loved it.
Now, in your circumstance, was your buyer unflexible on extending the date? So you were extended on your purchase because your seller was delaying, right?
No, our buyer was delayed because of the underwriting.
Your buyer was delayed because of the underwriting.
Mm-hmm.
Oh, okay. And your seller was flexible? Mm-hmm. It was willing to wait for you?
Yeah.
Okay.
Because they needed our purchase for them to purchase. It was like a whole chain.
It was like a whole domino thing.
It was.
Those are always fun.
Uh-huh.
I need this house to sell to be able to sell that house to be able to sell that house. I think the furthest I've ever gone through was 5.
Oh my gosh.
So this one had to sell to buy this one, who had to sell to buy this one, and so on and so forth.
How stressful. Imagine needing to hope that something 5 transactions removed from you works out in order for your thing to work out.
Yeah. Hey, I think one of your clients, too, we just recently had a situation where, as fate would have it, force majeure, what do they call them, acts of gods before they were about to close, the basement flooded.
Yep.
And it's when we had those big thaws and all the water was coming down and their sump pump stuck, and they were all lined up ready to buy a house somewhere else.
Yep.
And their buyer wasn't going to buy a house that, just had a flood in the basement. And you were really adept at making sure that your client was able to negotiate on his other side, which wasn't you because it was out of area.
Yeah, it had nothing to do with me.
Right. But you were able to kind of talk to their lender, talk with their buying agent or in the new location, and wind up, delivering a soft landing. So that was good.
Thanks.
Okay, so let's talk about contingencies, specifically home sale contingencies. One of the largest options within our contracts that gives you some level of protection is to be able to, when you craft your purchase, negotiate a home sale contingency. The contracts allow for it. We can just fill in the terms of it. Is it based on you selling there's actually 3 levels of it. You can be contingent upon listing, selling, and closing your home. You can be contingent on, I've already listed it, I just need to sell it and then close on it. Or you could be already listed, already sold, and you just need to be contingent on closing the transaction. And each of those individual components has a different negotiation factor. The easiest one to get accepted would be a home close contingency. That's where you've already listed it, you've already got a buyer, you're just waiting on it to close. And especially in this market, most sellers are willing to accept the fact that you're already sold, so all the hard work's done, you're just waiting to close, so they'll accept that contingency. But if your home is not yet sold or it's not yet listed, becomes a completely different story, because most sellers will say, well, you haven't done the hard work yet, and you want me to accept your offer that says, well, if my house lists and if it sells, then it will close, and it'll close in a time frame rapid enough to be able to satisfy our transaction. So we're not seeing very many sellers accept those.
And why is that?
Because there's too much unknown. So when a seller accepts a contract, they want to know they could start packing, start making all their arrangements for their moves, start getting their kids all lined up and registered for the school they're going in. If you don't have those types of, they're not guarantees, but those feelings of guarantees, then sellers are not very apt to accept those in this market. I
was just going to say, so is it fair to say that if there were no other competing offers, that a seller might be more willing to accept an offer like that?
So only slightly more likely.
Okay.
So in my 20 years, typically home closes have always been relatively easy. Home sales, where it's not yet sold and closes, those become very problematic, even in buyer markets, because that seller wants some level of certainty. It doesn't mean they don't exist. It just means they're very unlikely. But even in this market with the home close, the seller may be willing to accept it if you're not competing with other offers. Mm-hmm. So when you're competing against non-contingent offers, homes that are not contingent on the sale of your home, you almost always going to either not get your offer accepted, or there's an option, because there's leverage. You can leverage your offer better by offering more money. So in that case, what you're doing is you're buying, by paying more dollars, the privilege of being able to have your home close contingency accepted.
Okay.
Or you can make your offer sweeter in other ways. So it's just like with anything. Everything's a negotiation. Mm-hmm. I will give you this if you give me that. If you're willing to take this, I will give you that. It's all, what's more important? Time, money, convenience, certainty. All of those things come into place in the negotiation. In fact, there's like 35 different negotiation points on a contract, everywhere from the type of loan you're having, to the price, to the amount of earnest money, to what the closing date is, to what the tax proration percentage increase will be. And that's another whole story, tax prorations, that I won't bore you with right now. But Illinois is a rather strange state where we pay taxes in arrears, so that becomes part of the negotiation. And buyers always assume that taxes will go up next year, so they want more money than you paid in taxes last year. So and that's all affects your bottom line as a seller. So one way to protect yourself as a seller, if you have no place to go, is that home close contingency, but it's questionable about whether or not the seller will accept it. Another option, which is maybe more likely of an option if you're a seller, is you could try to negotiate with your buyer a seller leaseback or seller rent back, where I'm selling my home, you're going to buy my home, I don't know where I'm going yet. So when you close on the home, you're going to rent it back to me, and I'm going to pay you principal, interest, taxes, and insurance, your cost, for the amount of time that I need to stay in my home. So maybe the escrow period is 2 months, and I'm going to rent back for another 2 months. So that gives sellers the flexibility of having now 4 months to shop and find a home, which increases their chances of finding something. But again, everything's negotiation. So even though I said, the seller, I'm going to pay you principal, interest, taxes, and insurance, 2 years ago, we had a situation, hot seller's market. Seller was like, I need more time. I want to lease it back, but I'm not going to pay. And the buyer's like, well, we really want your house. So we're going to say yes.
Wow.
Because the buyers were so competitive. Buyers were willing to pay top dollar. They were willing to guarantee any gap in the appraisal between the purchase price if the appraisal came in lower. They were willing to let the seller live there for 2 months free.
Wow.
And just to be able to buy that house.
What a time.
What a time to be alive.
My goodness. Did you ever think when you first started your real estate career that you'd see something like that?
When I first started, no, but I think it took me about 2 days to realize that every day in real estate is different than the next. No 2 days are alike, because there's so many different types of transactions. so many different types of roadblocks and speed bumps and potholes. It's crazy. And that's what makes it fun.
Absolutely. It's what we love about it.
That's what I love about it.
Okay, so I'm a homeowner and I've decided that now is a great time for me to sell. I've heard the options. I'm not that worried about finding a place to live now. And now I am ready to talk about actually listing my home. And I think the next subject I'd like to move on to when talking about this is, if I am ready to start thinking about listing my home, and I am now in the position to start interviewing realtors to decide who is going to represent me, what are some questions that our listeners can keep in the back of their mind when they're having these discussions with real estate agents?
Oh, great question.
Because I don't think I realized that I even could interview realtors when I was first entering all of this as a consumer.
Is that right? Mm-hmm. So wait, let's talk about this for a second, because I want to understand this. So when you called me a couple of years ago and said, hey, we'd like you to come list our home, what did you think that appointment was?
I mean, to be honest with you, so without really having any knowledge of things, and we had only purchased a home, we had never sold a home before, and that aspect alone was actually a lot more intimidating than buying, to be honest with you. And when we called you to come, it honestly felt to us, and not because of anything that you did, but just because of the perception of successful realtors, we were kind of under the assumption that you were sort of doing us a favor by even coming by and seeing our place.
Well, obviously.
So we didn't know that we even should have been interviewing realtors for the position of representing us.
That's really interesting to hear. So that's like a public perception thing that I wasn't
100%.
even really aware of. No, by all means. In fact, you should recommend my sellers. Interview a couple.
Yeah.
Find out, one of the, as far as I'm concerned, and this is, I've been in this business 20 years now. This year marks year 20. And I've learned a lot. I've made successes. I've made failures. I've made mistakes. What I found to be the most true is I try to keep my business kind of close to where I live, because I know this area so well. And what we see is, at least when we evaluate different neighborhoods, I think an important part to know as a buyer is that the agent you're working with probably is local to the area, at least knows the area, the dynamics, the differences between how much price difference does it make if it's one school versus that school. What does being in this township versus that township mean from a value perspective? And that's why I like our appraisers when they're appraising homes. I'd rather them be local because they understand the dynamics. We have multiple neighborhoods in Lake County where there's so many overlapping different governmental districts, school districts, high school districts, elementary school districts, different townships, different villages, and all of those will have some effect on value. Some very limited effect, but some significant effects, especially schools. Here in this area, there was a time when there was a huge price difference between one school district and another. Now, luckily, over time, that school district has done a fantastic job of recovering from its, I would call it a stigma that existed. And they now rank nationally, and we don't see that price effect difference the way we did even just 10 years ago. But a local agent, local representation is going to understand that dynamic a lot more than an out of area. I'm not saying that an out of area agent can't represent you, because the mechanics of a sale are all basically the same. Mm-hmm. It has to do with the knowledge of the area and the amenities and the services that can affect how they market and advertise. So you asked me specific questions that they could ask. Number one, what are you going to do to market my home?
Great question.
How you market my home different than how someone else will market my home?
Great question. Absolutely.
And not a question so much as examples of prior listings. Mm. What do your listings look like? What does the photography look like? Do you do extra media? Do you do floor plans? We're finding now, do you do 3D tours? We're finding now that each of those individual things have a huge effect because more and more buyers are coming into this online. It's not necessarily that they're sitting in a realtor's office and the realtor's picking out 6 homes and they're going on a little caravan tour and going to tour all these different homes. We're seeing most of the buyers coming where they first saw your home via an advertisement or a post or some social media aspect that's coming online. So how much of your house can you highlight with what do the floor plans look like? We're seeing big spiffs, big increases in buyer turnout when their floor plans are ready and available. The quality of the photos.
I can't tell you how many people told me at my most recent open house, because I asked them as they were coming in, what brought you here today? And at least half of them, if not more, said the photography of this house was beautiful.
Yeah, it's
It makes such a big difference.
It really does. I've seen listings. Here's a question you could ask. Will you be using your cell phone to photograph my house? If the answer is yes,
Oh my goodness!
there's the door.
I was recently doing a CMA, and for those who don't know what that is, it's a comparative market analysis for a home for a potential seller. They were curious about how much they could potentially list their home for. And by the way, for anyone who doesn't know this, you can ask for that and not have to be committed to selling if you're just curious. If you happen to know a realtor and just want to get their opinion on that, that's something that is available for us to be able to do if you didn't already know that. But I was putting one together, and these are these beautiful, gorgeous, $500,000-$600,000 homes in Buffalo Grove that I was looking at, and some of them were cell phone pictures, and I'm like, I no hate to anyone who does it that way. I personally couldn't imagine getting a beautiful listing like that and then just being like, click, click, boom, done.
Yeah. Considering there's a lot of money in this business. Sellers pay a lot, and what are they paying for? Are they paying for it to just sell, or are they paying to for a return of value? And that's presenting and highlighting and showcasing and the marketing and advertising. So, we kind of break down our sales process into 3 sections. We've got the marketing and advertising portion of it, which is like your marketing department if you're kind of a corporate person. That's how we would relate it. Then we've got the sales division, which is actually the communication with the public and the negotiations aspect of it. And then the operations. And that operations is just as important. So the operations is what makes the process go smooth for clients. Making sure all the contracts are done efficiently and right and correct, and all the compliance is done correct. The sales is actually the negotiation aspect, but the marketing aspect of it is probably the most important if price and time is important. Now, I'm making these recommendations based on what I value as important,
of
right?
Course.
So some seller might say, well, I just want speed. I don't want
it done.
I don't want more money. I don't want it to be easy. I don't want it to be convenient. I just want fast. That's it. And hey, more power to them.
Yeah.
That's a valid incentive to want to be able to go on.
Yep.
But if you could have multiple ones or all 3, that's when the questions for your agent becomes important. How long have they been in the business? What's their track record? Are they a member of a team that does a lot of business? What does their marketing look like? What does their photography look like? Is it professional? Do they do videos? Do all these things? Do they spend money on advertising? When a potential buyer goes on to, let's say, homes.com, where is your listing going to show up? How many views is it going to get?
Yeah.
Are there any things that particular agent is investing in themselves to highlight your home so your home sells quicker and for more money? I don't believe that to get a fast sale, you have to sell it cheap. I believe you can sell it fast and get top dollar for it.
I agree. Now, I do want to ask one follow-up question based on those recommended questions that you suggested. You said that a question that consumers could be asking their realtors when interviewing them is, how long have they been in the business? Is that because you think that as a hard and fast rule, just because someone's been in the business for a long time, that they're necessarily and factually better than people who haven't been doing it quite as long?
It doesn't mean they're factually better. It just means they have more experience and they're exposed to more potential outcomes. So when it comes to, as you know, in this, anything and everything can and will happen. So what's the position of the person you're working with to identify and pivot to be able to deliver that soft landing for you, the client, whether you're a buyer or a seller, based on their experiences of having to overcome challenges. Think about you're flying on an airplane and you hit turbulence. So a new pilot might factually correct. They passed all the tests. They're very good at what they do. They can sit there and fly that plane. But in the moment when when that wind shear comes and there's a vacuum and that airplane might be about to drop 2,000 feet in a single plunge, that more experienced pilot is going to be able to maintain that plane better and deliver a less turbulence during the process. And that's why in most airplanes, when you go in, you're going to see a veteran pilot sitting alongside a newer pilot, because that newer pilot's gaining experience while the veteran pilot is providing that experience. So when you put those two questions I said together, which is not just how long have you been in the business, how long have you been in this business, and are you a member of a group that has some combined knowledge where you can partake in the experience provided by those other group members? Does that make sense?
Yeah, absolutely. Because, the last thing I would want our listeners to take away from anything that we just said is you should be scared away if someone says they haven't been in the business that long. But a good follow-up question to that could be, what is your relationship like with your mentor then? Do you have someone who's closely advising you in case something goes wrong?
You know what's funny about that question so you're speaking from someone who's, you're speaking about like the perspective of maybe an agent who's new in the business. Do you have a mentor that's helping and guiding you? I've been in the business 20 years and I have a mentor and a guidance and a coach. I think it has been so valuable
You don't know everything already?
It's been so valuable to me and my clients about just kind of participating in the knowledge that's amassed by thousands of other people, because, like we said, no one can know every possible scenario that's going to happen in a real estate transaction. And even someone with 20 years, I rely on my mentors and I rely on my coaches.
Absolutely. Okay, so moving on. So you've interviewed a realtor, you've asked some good questions, you feel good about the connection that you've made with one, you've chosen one, you've hired them. They are now going to give you their opinion on the price, and they will likely, you might want to ask them to come through and look at your home and give some tips on some things that they could do before listing. Dick, let's talk about improvements a little bit. What are some of the, if any, you could just say that it depends on the house, and that's okay. But if you are able to give some general tips on things that you see that you think that overall are good choices to make before listing, what would they be?
I strongly recommend that people ask their agent that question instead of rely on the generalities for a specific reason, because every market's different.
Of course.
Every neighborhood is different. We have certain neighborhoods where we sell in where the buyers are very forgiving of we've seen zero value difference in homes between it has granite countertops and it has beautiful faux granite Formica countertops. Because it's an entry-level community. People are just, trying to get into home ownership, and they're going to accept that the lower material because they can buy that house, and we will see no difference in that price in the purchase price. So I strongly recommend that if you're thinking about selling, you contact the realtors or the realtor or realtors that you would consider yourself working with. Invite them in and say, based on your knowledge of this neighborhood and this market, what should I upgrade? Typically, those answers are going to be focus on the kitchens, focus on the baths, make them pretty, work on the curb appeal, do some landscaping, cut the beds around the bushes in the gardens, power wash or soft wash. The soft wash actually does some amazing things without any potential damage to any wood around the trims. But clean, neat, and try not to do DIY projects. We see significant value changes where if someone paints their own room and they're not perfect about cutting those corners, you might as well have not painted, because the buyers will look at that. They'll look at that more than they look at a hole in a rug. Honestly, it's kind of strange how the little things matter almost more than the big things.
Wow. Okay, great. Okay, so you have listed, and you are now also focusing on the buyer side of things. Do you have anything to add to that portion of the conversation?
The buyer side, what do you mean?
Well, you're selling a house and then you're buying it. In this day and age, do you even?
Oh.
Go ahead.
No. Go ahead with the question.
Okay. In this day and age, I mean, are you working with your realtor to help you buy a house?
Me? Yeah, of course.
Yeah.
Our recommendation is having a buyer's agent represent you, as opposed to as opposed to relying on necessarily the seller's agent is probably a rough spot to be in. Who's representing your best interests? Huge believer in buyer agency. There used to be a time in our business. There used to be a time in our business when buyer agents represented the seller. It was called sub-agency.
Okay.
So the seller would hire a listing agent, and then the listing agent would pay a buyer's agent to bring buyers.
Sure.
The seller's agent paid it. That's the way it is now today too. But the legal difference was the buyer's agent was the fiduciary responsibility for the seller, not the buyer. So there was no one actually representing the buyers.
So kind of like the same analogy that I used last week when I talked about buying a car. So what I had said last week, for anyone who isn't familiar, is I had said that not once have I ever driven off of the lot after buying a car and felt like I was truly represented and given the best deal possible, because there was no one there on my side of the transaction other than me, myself, and I, or my husband in some of the scenarios, negotiating with any sort of expertise, knowledge, making sure that my best interests were protected. And so basically you're describing a scenario like buying a car.
Yeah, basically that's what it was. It was basically, so the listing agent was, let's say, the owner of the car lot, and then the buyer's agent was the salesman hired by the auto dealer. Yeah, so the buyers didn't have any representation. So I mean, they were there to facilitate the transaction for them, but they didn't really have any fiduciary responsibility to them. Then, I don't know, about 20, 30 years ago, they changed that and they created, at least in Illinois, called designated agency, where the buyer agent was still compensated by the listing agent, but fiduciary responsibility to the buyers. So the buyers could rest assured that their agent should be working for their best interest only, not the sellers. That includes all negotiation of terms and always keeping the buyers front and center, not just above the seller's interest, but above the agent's own interest, of course.
Okay.
Yeah, so I'm a big believer in buyer agency. Obviously, with the changes coming down, there's questions. We could probably fill 8 hours when we talk about to talk about what that's gonna look like, what it's gonna mean. There's still a lot of questions in the air. The settlement hasn't yet been approved, but unfortunately, I think what we're gonna see is in the interim, this is going to lead to probably higher expense for the buyers because the value of the home is the value of the home, and there might be situations where the seller says, okay, well, this is the value of my home, that's how much I want, and I now will not pay a buyer's agent, and then the buyer's going to have to come out of pocket to pay their own buyer's agent. That's going to happen.
Now, just for clarity, that was always an option, correct?
Always an option.
Okay.
Yeah.
So that part didn't change.
No, it didn't change at all. But the way the media is talking about it, they're making it sound like it's this kind of brand new thing.
I know.
So the president of the United States get on national TV 2 weeks ago, and he said, for the first time ever, commissions are negotiable. Yeah. Well, welcome to like 1982. Commissions have always been negotiable. So whatever. I won't get down the political path today. Oh my God, where did time is holy crap, time has gotten a little bit away from me. Chris, we're gonna have to take a break. So we'll be back.
Unlocking Lake County with Dick Barr will return in just a few moments after these important messages. Don't touch that dial.
It's time for real estate trivia.
What is a property's market value minus any debts called? The answer when we return.
The music never stops.
Okay, here we go.
Is your 98.3
The Life.
The
St.
Life.
Gilbert's Catholic Church in Grays Lake reminds the class of 2024, Each year, over half of all traffic fatalities and public awareness, deaths due to lung, colon, breast, and prostate cancers are being reduced. Cancer is a tough topic for people to confront, but if you take the time to be informed, you can greatly reduce your risk. This from Oganoff Auction Service in Round Lake, working to make our community even better. Remember, an ounce of prevention is worth more than a pound of cure.
And now for today's trivia answer.
What is a property's market value minus any debts called? The answer is equity.
Welcome back to Unlocking Lake County with your host, Dick Barr.
And we are back. This is Dick Barr, host of Unlocking Lake County, here with the lovely Kristen Kaufman. Say hello.
Hello.
One of the things, I think maybe it might have been a bad idea to have such an awesome intro, because sometimes I find myself digging along to the introduction music and just like, yeah, this is cool. Anyway, so we went a little bit long on our home sellers tip. So we've only got about 10 minutes, a little bit less than 10 minutes. So we're going to try and get to at least a few listener questions and answers that you guys have provided. You guys are awesome. You just keep them coming. We love people asking questions. So the more the merrier. So
absolutely.
Go ahead.
All right, Dick. Our first question is, how can I tell if my property is priced too high?
That's an easy answer. If your open house collects more tumbleweeds than buyers, you might be priced too high. Actually. Yeah, I need sound effect for that. See, if I had a producer.
That's what I'm here for. It's fine.
There we go. Pricing is tricky. So it's not as simple as saying, well, the house hasn't sold, so it's therefore priced too high. You got to make sure that there's the property is being properly marketed. So if it's being marketed and it's not selling, then maybe the price is too high. But if it's just sitting there, sitting on some service and it's not selling, then maybe it's not the price, and maybe there's other things sellers can adjust before deciding to drop that price. But the best way to do it is talk to a professional, find out what the values of the homes that are selling in the area are, what they're selling for, and how long they're taking to sell. And if your number is higher than those, chances are you're priced too high.
Okay, our next question is, how long does it take to close on a house?
Another great question. You could literally technically close on a house as quickly as about a week. But that's not likely. Mm-hmm. That's not the average scenario. That's a cash transaction if maybe there was no title insurance getting, okay? Technically you can close in an hour because they have a quick claim deed where I can literally sign my house over to you, boom, quick claim, it's yours, we're closed. But the general rule of thumb is you want to figure 30 to 60 days. That's about how long escrow typically takes. Reality is some lenders can do it as quick as 3 weeks, and then some cash offers can close in as quick as 2 weeks, because as a seller, you've got to get survey, you've got to get title insurance. All those things take a little bit of time.
All right. The next question that we have here is, what's the deal with closing costs? An open-ended question.
That is an open-ended question. What's the deal with closing costs? I should
use my Seinfeld voice. What's the deal with closing costs?
That's a good one. So closing costs are costs to the transaction that some of them hit the seller, some of them hit the buyer. For a seller, typical closing costs will be your brokerage fee. The base. Some call it the commission. You'll have an attorney that you pay. In Illinois, we're an attorney state, so most sellers and buyers have attorney representation. And I do not recommend skipping on that. Do not skimp on that, because it doesn't cost that much. Rates range, I've seen generally right now from $400 to $700, but typically real estate attorneys will not charge you by the hour. Mm-hmm. They'll just charge you for the whole transaction, and they do so much. They do a lot of the post-inspection negotiation. They make sure title looks right. They make sure the deed looks right. They make sure that you're protected. So don't skimp on that. But typically, you're about $400 to $700 for the attorney, and that's on both sides, buyer and seller. You also have title charges. So as the seller in Illinois, title is a seller's charge, and that's basically the insurance that when the buyer buys the house from you, that you're free and clear of all liens and encumbrances, and that there's no encroachments. And the title company will choose whether or not they're going to insure the survey and insure the actual lot line, in addition to any liens that can potentially come up in the future. On the buyer side, you've got some lender costs, you've got your attorney cost as well, and then moving forward, you'll probably have some buyer agency costs as well. Typically on a buy side, depending on the type of loan you're getting, you could be anywhere from say $1,000 to $5,000. And sometimes we can get some of those closing costs paid for by the seller. And on the sell side, you're about anywhere between, without the brokerage fee, you're probably anywhere from $3,000 to $5,000 is your typical average closing costs.
All right, there you have it. That's the deal with closing costs. Our next question is, I like this one. How do I win a bidding war?
Oh, great one. Mm-hmm. There's no good answer to that.
Perfect. Moving on.
Right, exactly. So a bidding war, at least here, custom is when there's multiple offers, the agents will make the request, or the seller's agent will make the request of highest and best offer. So what they'll announce is, we have multiple offers. We are now accepting highest and best offers. And that's not a negotiation. That's not a, will you accept this? Well, I want this, and you accept this, and you kind of work towards the middle. It's, we have multiple offers. Whoever gives us the highest and best offer, we will accept. So you have no guidance. So you don't know if you're competing against someone who's $5 over asking or $50,000 over asking.
Yeah.
We've seen situations where buyers have submitted bids over $100,000 over asking, and the seller still accepted another offer that was higher or better. So that's important. Higher doesn't mean better by default. It's highest and best. What does best mean? Well, it's the best overall offer, so not just the price, but all the terms.
The strength of the offer.
The total strength of the offer. We have situations where we list a house and we'll get an offer that's crazy high, and the seller's like, ooh, that's the best offer. Like, no, it's not. Because we only, let's use fake numbers. Let's say the offer was for $500,000. Let's say we were listing it for $400,000. The offer comes in $100,000 over. That's exciting. I get it. But if we expect the appraisal to come in at $425,000, what good is that $500,000 offer? Because we're not going to be able to close. So there's other tips and tricks we can do to strengthen that $500,000 offer. Are they willing to guarantee the gap in the appraisal? So if the appraisal comes in at $425,000, are they willing to take $75,000 out of the pocket and come to close?
Because to be clear, it does need to be cash. It cannot be part of your loan. Like, you're not going to get mortgaged for that extra amount of money.
Correct, right, yeah. So the bank's only going to loan up to whatever the appraised value minus the down payment. Yep, absolutely. So it's got to be cash out of pocket, but it can be part of the loan. Here's how I'll explain. So 20%, let's say I'm coming and I'm doing a 20% down, okay? And the appraisal comes in short. I can lower to a 10% or a 5% down and use that extra percentage. So I can shift down payment money to appraisal gap guarantee money. So if we can like take down $10,000 on a $500,000 loan from a 20 to a 10%, I now have $50,000 of cash freed up, so coming from the loan. So just to be clear about that.
That's quite an option. So is this a suggestion that you would make just because of the way that today's market is? Or is this more of a situation of, if you love this house, there's a will, there's a way, but it may not be your best approach?
So I'm a particular subscriber to the belief that property values are going up still, and they're going to continue going up. So my recommendation to the client is, you have to evaluate how much you want that house, how replaceable you think that house is with another house that comes up on the market, and your ability to be able to buy that house before values go up, and make that decision. And we'll provide them all the data and information so they can make an informed decision. But again, it's their decision, not ours. We don't recommend they should or should not buy anything. We recommend we show circumstances and options, and we allow them to make decisions based on that.
Absolutely, because we are your representative.
Yes.
We are representing what you want to do.
Absolutely.
All right, we've got one more question here that I think we have time for. What is the best feature to look for in a new home?
A chocolate fountain. One of the things I tell buyer clients frequently is, because a lot of buyers are looking for houses that are perfect and have all brand new features, and they're willing to pay top dollar for those. But here's something a lot of them don't consider. You're paying top dollar because it's new today. When you go to sell, is it 5 years, 10 years? When you go to sell, if you don't continually maintain that and upgrade those features, you're selling it, you no longer have the new premium. So a lot of times I'll recommend people, if you can do it, is maybe buy something a little bit less expensive that you can put sweat equity into, and then you're going to have a value increase over time, most likely, assuming the market stays with it. But buying something that needs work and fixing it is a lot of times in the long term better than buying something perfect. It's just like, the buying a brand new car. You've got that, the driving off the lot. Not that your value drops after you buy a home, but the value of those improvements drops the longer you go and the more your dogs chew the carpet and, bite the beautiful wood trims.
What a great answer. I think that's all the time we have for questions today.
Yes, it is. And I want to thank everybody again for joining us. And I want to thank Sly Marinka of the Sly Marinka team at Cross Country Mortgage. And I want to thank one of our sponsors, two of our sponsors, Harder and Shotland Law Firm in Round Lake Beach and Fidelity National Title. We'll be back again next week, and we'll have more great information about everything that's happening in the Northwest Lake County. Thanks again, and have a great week.
That's a wrap on today's episode of Unlocking Lake County with Dick Barr. Thank you for joining us on this journey through the heart of our community, exploring the ins and outs of real estate and meeting the people who make Lake County truly remarkable. Remember, every property has a story, and every community member holds a key to unlocking our county's full potential. Don't miss out on discovering more hidden gems and expert insights. Make sure to tune in every Wednesday at 12 noon for another episode of Unlocking Lake County with Dick Barr. Until then, keep exploring, keep dreaming, and keep unlocking the possibilities that await you in Lake County. Thank you for listening, and see you next week.